Well, Nigeria's ICT and telecoms, and as well as agriculture, were three of some of the sectors that grew significantly in the last GDP numbers for fourth quarter of 2018 that we received just early this week. Today's Thursday, of course, the Valentine's. Of course, with today's Valentine's Day, it's going to be a lot of text messages and images on Instagram and whatever, on WhatsApp, whatever it is. So, expect folks to load up on airtime and data packages, and the telecommunications companies are the ones who will be smiling to the banks. But let's just put all of this in context. But again, it looks like Nigerians are waking up a little bit sluggishly to the Valentine's Day. Check on my Twitter line. Just only about one or two individuals talking about the Val's Day and images of their wife. I'll keep all of that a little bit private. But you want to check it out, then let's get on social media. Timitoko Lubile, who is a member of the economic think tank at Financial Derivatives, is here this morning, and she's the one sharing the business of I Love You for this Consumer Day. And Apple is just one of the consumer goods, that agri-products that well, I'm not sure we produce so much in Nigeria, do we? Good morning.
Good morning, boys.
We're not there.
No, we're not.
So whether it's apples like this, red apples, green apples, or even flowers, horticulture, it's a very small business here. We're just scratching the surface, as it were.
Yes, definitely. I mean, Valentine's Day, even though, you have a lot of millennials, like you said, they celebrate it, they're high on
young people. Yeah.
Exactly, they're high on the hype and everything. We have like 83%. I saw research that showed that 83% of Nigerians celebrate it. So definitely the restaurants, the cinemas, the gift shops are smiling to the bank. But, yeah.
But we haven't really drilled down. If you look at some of the gift items that we have, and our folks in Nigeria purchase, they're largely imported.
Yes, definitely.
They're largely imported. The balloons, the flowers.
Chocolates, the flowers. Like
almost 90% imported.
Exactly. Which
I'm not too sure if we still make I Love You cards in Nigeria. The ones you just fold up like this and things like that.
I'm sure they're still in the...
they're still in the I need to go check that out. If we still produce that, and folks just write a few things, I know that in. But apart from just having the sales and spending our FX, which is our petrodollar, to import these flowers and chocolates and balloons and whatever we can have.
Yeah,
we can produce.
Yeah, definitely. I mean, if you take chocolates, for example, where we export cocoa. So that is definitely one commodity we shouldn't be having to export. We shouldn't be having to export the cocoa and then now import the refined chocolates. Yes, it's really sad. And, we can do so much more. And it's a booming time. I mean, Valentine's Day is celebrated globally. It's celebrated in Nigeria. So it's definitely something we can tap into and make some money.
I agree with you. But again, if you look at our capital importation, which was the latest economic data, and it looks like a very heavy week on the economic front. We started with the GDP, we got the capital importation late afternoon yesterday, and tomorrow's inflation. So it looks like the statistics office is pouring it all down on us at the week of elections. They say, look, I'm going to soak you guys with data before you go to the polls on Saturday. So that's part of the burning economic issues.
Yes.
What do you folks read in the numbers?
Okay, so like you said, the capital importation report came out yesterday afternoon, and what we saw is that quarter on quarter it fell by 25%, the total of our capital inflows. But if you check year on year, it actually increased. But that is nothing to celebrate yet, because what we saw is that foreign portfolio investment, still accounted for about 70% of the total inflows. And a country cannot be sustained on portfolio investment because it's technically termed hot money. And hot money is something that's here today and gone tomorrow. It depends on, so it's very volatile, so it's nothing to be sustained on. And if you check the one that we could actually grow from, foreign direct investment, we saw that was just about 7% of total capital inflows. So that's
sort of the story that is, well, I think for full year, we did about 38% better than 2017. But fourth quarter was not really good. But overall, a lot of money of this capital FX inflows went into our financial assets, stocks, treasury bonds, and whatever.
Yes.
But again, what's good on the burning economic issues? Let's have some good news, because right now, what I'm getting on Twitter, on social media, is that it's a little bit quiet out there because of the elections. And folks says they are not yet getting any flowers or balloons or cards or chocolate, not even on their work tables, because folks are focused on the elections. It looks like these elections is spoiling 2019 Valentine.
Definitely. I mean, elections would dampen the spirit, but I think the spirit is still there somewhere.
This is not. So this is one thing. Don't dent it. Don't dent love. So okay, love trumps everything. But what else is there on this impact of what is the downers and the goodies? Okay,
so the goodies, we have that, Brent is now inching towards $65 per barrel. When I checked this morning, it was $64 per barrel. And that is, from where we're coming from, we started here about $53 per barrel. So that is definitely good news. And we're still projecting that it could increase in the coming weeks because it depends on the, the U.S.-China trade talks. They're engaged in talks from today and it's going to run through to the end of tomorrow. And so people are expecting, the markets are expecting, a positive outcome, hopefully, because the March 1st deadline is there, because by March 1st, there's supposed to be a fresh round of tariffs. So we hope that there will be good news from the negotiations. Yeah, so that's definitely good.
Okay, inflation data, you folks still keeping your
fingers crossed.
The forecast of a shade of 11.4?
11.35, yes. We're definitely keeping our fingers crossed that it would come down from 11.44% in December to 11.35% in January. And obviously, after the December hype, the December Christmas festivities, we have there's a low in demand. There's a slowdown in demand from consumers in January. You have to pay your school fees. You have a lot of bills that you're paying for. So there's a slowdown in demand. And so we hope that our projection is correct, and that is good news for the average consumer.
Well, when capital flows into a country, part of it goes into consumption, whether we like it or not. Even though a chunk of what we have currently goes into financial assets.
Yes.
Stocks, bonds, other investments.
Yes, and I think that is one of the things that drove portfolio investment, because we have that interest rates were inching up around that Q4 season, and so that definitely attracted investors. But like I said, the negative and the danger in that is it cannot be it's not sustainable.
No, Q4 was paradise for foreign investors.
Yes,
they were in paradise last quarter.
Yes, and that reflects
because rates went even short-dated treasuries went as high as 15%.
Yeah, so it was definitely.
Now we're down to just about around 9 or whatever percent. So they creamed off quite a lot of money. So it was a good time for them to take money out of the market and bring more in.
Yes.
Well, if I'm just selling down on my assets. And I'm just giving you money at that percent. If you pay me up front, I don't mind.
Yes, but it depends on more than, so it's the confidence. There's also the confidence factor involved in when you want to take your money to any country. And so I'm hammering on this because it's important to note that foreign portfolio is not something you can rely on. It's if the U.S. Fed,
don't sleep on
exactly, the U.S. Fed increases rates to, I don't know, as high as you can imagine, of course this money is going to be gone in hours.
Don't go there. Don't go there. Don't spoil the mood. Don't wake someone up in Washington. It's still early morning hours.
I'm sorry.
It's still very early morning there. Don't let the Mr. President hear that.
Yeah.
Don't let Mr. President hear that. Just let's let him have a nice sleep before he tweets and before you know it, and something else happens. So let's just keep it quiet. But again, we're moving on out of this week with elections, and next week will be a major issue. Have we seen any major upside in terms of domestic prices for agro products? Have there been any significant change? Because folks, I'm not sure anybody's buying extra mundu of Gary because of the elections. I'm not too sure.
I mean, some people might, just to hedge against.
Perhaps an extra gallons of petrol.
And that is,
just to watch the news.
You want to buy your petrol, you want to stock up on, because you don't know. The thing about these elections is the outcome is very uncertain, and we're hoping that it's as peaceful as possible. But, we don't know. Nobody knows, what it's going to bring. So there might be some increased demand as a form of hedging against any fallout or any of such things.
Okay.
Yes.
Thank you so much. Thank you
very much.
A member of the economic think tank and research analyst at Financial Derivatives Company.